Good morning, everyone. Today is Wednesday, February the 13th. This is the Futures in 5 pre-market edition. We are looking at charts that are expanding. Notice this is going to be our breakout level for the day, and this is going to be the area of frontline resistance that we see. We're going to have two regions above that. We're going to see somewhere around 64 to 65 and then 71, and that is 2764 to 2771. We are in a breakout space that is sort of flattening out. So here's the thing, our pullbacks, every time we've come into this 48 area, we have found buyers. We're going to continue to look for buyers in that space. If we lose the level, this 2741 will be our first line in the sand. And then, we've got all this old resistance that really could be as high as 37 or as low as 34. We'll be watching for that. All pullbacks are buy zones in this breakaway formation. So watch these levels, watch your price action. If you want to trade counter trend today, and trending is long, you want to get into tighter time frames that allow you to see the rotation of price. You've got to look for failed resistance to consider shorting action and positive support bounces for long action. Otherwise, you're going to expand your risk. Here's our 70.37 level from yesterday. We've got a top at about 70.64. We'll add that guide. Next is 70.88 and then 71.15 or so. Those are next in line. Again, bullish motion, bullish trend, and the pullbacks could be as low as the low early at 70.11 to 70.15, still going to find buyers in that motion. The first time we lose this region, I'm going to move this up just a bit. Actually, no, we'll leave it right there. Maybe we move it up a tick. The first time we lose this area, 70.38, what you want to do is say, wait a second, have I tested a lower high? That answer is going to be yes. The next question is, where did I see buyers break away? It's going to be that 70.28. If it pulls into that region, you're going to see buyers try to press forward. If they can't get up over 70.38, we're going to have a rotation that's a little bit deeper. But right now, algorithms are really running the show, and they are definitely pushing us higher. The YM is the chart that's got probably the most strength in motion. We'll use a new line in the sand up here at 25,533 for the breakout area. Take a look at this, old resistance, new support. It only tested it once before rocketing forward. That happens when you've got bullish action all the way across, when you look at 4 hours, when you look at 1 hour, when you look at daily, and when you look at weekly, and the slope of momentum is up, your charts are going to have the runaway patterns that they have currently. That's because momentum is in gear and algorithms are just looking for price action and buying into the price action. And when it dries up, they leave. That's just a very common space. Now, as it moves away, we'll have a little reversion to the mean event. That's going to happen across the board. That reversion to the mean could be a little deeper, but it could also be fairly shallow if our momentum stays high. It just depends on what these folks are doing. Here's the thing. Take a look at this number, 435 or so, definitive higher low at the first pass. As long as we stay up here, we're very likely to move higher. Once we start losing this, we could see some sort of reversion to the mean or reversion to major congestion on the horizon. Taking a look at oil, we had the EIA today. Excuse me, the EIA was yesterday. No, the EIA is today. The API was yesterday. That's really frenetic of me right there. But what we are looking at, take a look at this momentum indicator. It's sitting right between our ranges of motion, and so is price. And so we expect it to bounce and fail, potentially hold a higher low. Look at what we're doing. We're sitting above the moving average here. When we're above the moving average and we have that momentum event, we could easily get higher lows that move us into the buy zone. What are we looking at? We are range bound with these edges up here, telling us that as long as we stay below these spaces, the chart is going to have trouble breaking out. Take a look at how many people sold at 55. If we want to take a look at broad price action, here's one shoulder, one head, potentially the next shoulder, or it's just big pockets of resistance. Here's what we know. Just about every time we get into this zone, Any bounces higher have failed. Now we've got OPEC tightening, we've got a lot of things going on, but I just read a new article that said potentially they are going to still have a global supply as global slowdown all over the world continues. Let's take a look at gold. Gold is working inside of this tight range. Very, very tight range in my mind. What do the edges do? They bring buyers in. If you want to be really firm on what's going on, 1306 gives us frontline support. 1320 gives us frontline resistance. Breaks out of those zones, not out of the ordinary. Price action has been consistently moving up while momentum stays steady. That's like driving at a current speed with your cruise on, right? And so here we have this still holding pullbacks, still buy zones. This is still quite bullish as the dollar continues to move up. You want to be careful here with size particularly. All right, good luck trading today.